Welcome to The Lumber Word, where industry veterans Matt Beamer, Greg Riley, and Ashley Buckle dissect the world of commodity lumber each week. We bring you up-to-date insights on supply, demand, and market trends, sharing our trading expertise to benefit everyone in the supply chain. Join us for informative and entertaining discussions that guarantee to make you wiser about all things lumber.
Everybody, welcome to The Lumber Word, Episode 9. Matt Beamer, Hampton Lumber Sales, Greg Riley, Sitka USA, Ashley Buckle at the Lumber Channel. We've got a guest today also I'll introduce in a few minutes, Greg Kuta from Westline Capital Strategies, where we'll talk about the lumber futures world and everything exciting about the new contract. So I want to do the disclaimer. Greg, Matt, and I are seasoned veterans who have made some really big mistakes and also had some great ideas in our life. So anything that we recommend or talk about in here are simply our ideas, and consume them at whatever risk that you want to. So a little shout out to Fox Gell, who listens, one of our new listeners. Greg, I was talking to our friend Mike today, and he was out to dinner last week with somebody, and they said, "Hey, have you heard the new podcast, The Lumber Word, that I've been listening to?" And Mike goes, "Yes, I'm very familiar with the guys." So I thought that was cool. I think we've got a lot of listeners from all over. Last week, we talked a little bit about coming back from the shows and what we saw. But what I want to do is get to Greg pretty quick here. I want to recap a little bit about the cash from last week. I mean, I know Greg and I were sitting around in the office, Matt, last Saturday, and then every day this week so far. And look at, if you have wood on the ground, you're still moving some inventory. But let's roll through a couple of the different regions in North America and production regions, talk about what we're seeing. So, Matt, what about the Pacific Northwest lumber and the Canadian Western spruce? What's the breakdown on that from last time we did this?
You know, it's just the prices dropped on green Doug fir so much that it's now become a bit of a speculation play, and there's been a bit of a volume rally here on green Doug fir. The dry Doug fir and the dry hem fir business is just steady. And then I think the narrow lumber's easier to sell than the wide lumber. So 2x8 and 2x10 and 2x12 are really cheap, honestly. But, you know, having said that, we're getting orders and we have maintained our order files and extended them. And studs are okay. You know, we're selling enough volume each day to keep the order file going, but we're having to trade some price also. There's competition for stud orders right now. So I don't know. All in all, I think we're pleasantly surprised with the state of the market and the cash side in the West here as we finish September.
So Matt, what? Just always curious that since you live in both those green and dry Doug fir worlds, what is that spread now between green and dry? Is it getting wider?
Yeah, mills are starting to switch over to dry. You know, so I was talking to a guy that produces green Doug fir here, I don't know, half an hour ago, and he's, you know, they're moving their 2x4 and 2x6 over to dry. I mean, 2x6 green got down in the low to mid 300s mill, and dry's like in the 400s. There's a big enough spread to justify drying it. 2x4 dry has been trading in the, if you're not dumping C plus tallies out of Canada, you know, if you're selling actually the kind of tallies that people want to buy, you can get lots of low to mid $500 FOB mill orders on dry 2x4. And green has, standard better green got down into the low to mid 300s. So you're talking like $200.
Just so everybody knows what Matt's talking about here, if you're not familiar with green and dry. Green product usually stays in markets closer, Matt, and correct me if I'm wrong on this, closer to the coast, places with higher humidity levels, so to speak.
It's basically the West Coast plus a couple other markets like Oklahoma, Texas.
Northeast has
Missouri.
A couple of spots still.
Yeah, the Northeast has a few places, but 90% of what's produced in Oregon and Washington either stays in Oregon, Washington, or California. Sometimes Arizona.
Generally, what is it, $50 to dry as a rule, or what do you use?
I think it's more like 80, but okay. I don't know exactly. Okay. But I think it's more than you think it is. You know, it's
It certainly could be now, but Matt's point is when it gets to be so the spread gets so wide, it doesn't make any sense to not try it if you're getting orders there, right? And some mills don't have dryers though, right? And some of the smaller mills.
Yeah, I mean, there are mills that just refuse to ever dry lumber. They're in the green Doug fir business. That's what they're going to make, and it doesn't matter what the spread is. But there's plenty of mills that can go back and forth. Most of the modern mills can. So there we are.
Would right now, the months we're going into, would Texas be buyers of green since it's getting a little cooler there at these discounted levels?
Not usually. They have other options. They have yellow pine, and they have spruce, and
That's a good point.
And there are some jobs down there that require Doug fir. Some of the apartment jobs need a Doug fir or yellow pine strength rating. Yellow pine's going to win all those arguments right now. The only thing really that goes into Texas green is long lengths, and that's probably won't change anytime soon. I mean, people like that wood, and it yards well down there. So that's also the same in Oklahoma and Missouri and some of the other markets. They like green Doug fir. It takes a nail. The only drawback with green Doug fir is just the weight of it. It's just heavy.
Yeah. Let's go over to the BC side where you also trade. And what's going on with the British Columbia 2x4 and products out of there?
Well, we're not moving a lot of 2x4 because we have a fairly significant order file on 2x4, and we're just not producing a lot of 2x4. So what we've been selling and what we've been focused on is 2x6, heavy 18s and 20s, which is a bit of a niche because not a lot of other mills are pumping out very many 18s and 20s. So it gives us a chance to leverage those tallies with higher prices. And, that's working. But yeah, 2x4 hasn't really been our issue at all. And then when we do come up with some 2x4, it's usually, again, heavy 18s and 20s, which makes it worth more than just a canned random 8-16.
Greg, could you jump on the eastern spruce side and tell me what you're seeing out there?
It's been the same for a while now, where there's good liquidity, the wood is moving, and prices are grinding lower. And there's a few products that are relatively weaker, and then there's a few products that have some relative strength. We've been talking about it on the show for a number of weeks. 2x6, 9s and 10s have been under a lot of pressure. 2x4 16s have been in good demand, and that hasn't changed.
Greg, did you see any action on Eastern 8s, 9s, and 16s today? I had heard at the end of the day that they got some action on some short covering with studs out east.
I did not see enough that changed the dynamic at all. I mean, like I've been saying, we've been grinding down. We've been buyers in the market every day for the last several weeks, and it's like every day or two, you're trading $5 or $10 lower than you were. Not enough to change any dynamic just yet, Greg.
Yeah.
And how about Euro spruce, Greg? A bunch of boats have hit in the last few weeks. It seems to be they're cleaning up pretty quickly. What any dynamics there that any traders should know about?
I think the Euro wood. We're at a run rate that's 40% of what it had been in the late last year, the first part of this year. Yeah, for the most part, that volume is moving pretty smoothly through the ports. I mean, if you're competitive at the market price, you're going to keep moving it. If you want to hold for a higher price, that's not going to get any orders at the time being.
Yeah, great. One of the things that we rarely talk about, we were chatting about it, the panel I was on in Indianapolis, OSB. So when I saw print come out yesterday down $15 to $20, one of the conversations I had out in Indianapolis was with all the consolidation, when OSB does slow, you get like a huge air pocket. So if it's trading off in random right now, I can only imagine, and again, this is only my opinion, what it's trading off in the spot market right now. So that must be a little bit weak. And in Southern Pine, Matt, you had a good conversation on that one. I think Southern Pine is still one of the least expensive species in most widths, so to speak, and is especially 6-inch.
Yeah.
I don't know as much about 4-inch, but it still doesn't have any real solid footing. It's trading.
But 4-inch pine had a good run. It had about a $70, $80 run over the last 3 weeks.
It did.
And I think that's kind of run its course at this point. But I mean, it had a good run.
Yeah, good point, Greg. It did have a good run on that. 6-inch didn't really come along with it, though, did it?
Greg, do you attribute that to traders just stepping in to cover on 4-inch pine?
I look at more the 4-inch is more for multifamily guys and truss guys. right? I mean, MSR,
And it's a lot cheaper than spruce.
yeah, MSR spruce is, after having the rally earlier this summer, has held up. I mean, yellow pine was just selling at such a huge discount.
So this is a perfect time, Greg. I'm gonna introduce you here. Greg Kuta from Westline Capital. I've known Greg for quite a long time, and Greg, maybe you can update and give us movement through the industry and how you got there. But Greg is an expert on futures and has, I would say, some most contacts on the futures side, especially related to the spot market. He and Alex Mead from StoneX worked together. I saw them both put on a great presentation in Indianapolis. Greg was like, "Hey, get Greg on the phone so we can talk about, or get him on the line here so we can talk about some futures."
And I just want, for our listeners out there, you're hearing the name Greg a lot today. I just want to let you know that we got 2G and 3G today. So we've got a 5G broadcast live and in Technicolor.
I'm looking at our names and I'm like, you're right.
No wonder why we're glowing right now.
So I'm just going to refer to you as 2G, okay? I'm sorry.
I like that. That's okay. That's okay.
So Greg, look at
I refer to as a lot worse. So don't worry.
I'll set the table here. I watched your presentation; it was great, and I kind of look around the room and I read faces, and it seems to be, you were speaking to a tough crowd there. A lot of people that just deal in the cash market, not the physical market, or the futures market as much. But I know Greg with 2Gs, Matt and I spend a lot of our day looking at futures because it is a major part of our toolbox that we use.
Absolutely.
So what are you seeing in futures? Give us a little bit of conversation about what you see going forward with the new contract and whatever else you want to talk about a little bit here, and then we'll pepper you with some questions.
Yeah, no, first of all, thanks to everybody, Ashley, especially for having me on the show. I truly appreciate it. In your previous forum, we had done this show for a while. But long story short, for people that don't know me, I've been trading lumber futures exclusively since 1998. I went off on my own in 2009. I have my own company, Westline Capital Strategies. You referenced Alex Mead at StoneX. StoneX is an FCM that clears futures transactions. So they're like Charles Schwab or a JP Morgan or a Goldman Sachs. With equities, they serve the same purpose with commodities and derivatives. Again, I've been doing this since 98, heavily concentrated in the industry, the entire vertical food chain of sawmills, so Eastern and Western SPF, Doug fir, hem fir, domestic. You get into Euro now, Southern yellow pine, Eastern SPF from Boston, Great Lakes. If we can correlate it to futures and that there's a significantly statistical correlation, then there's a relationship between cash and futures. And that's kind of what I specialize in. And so kind of what I'm seeing from a futures standpoint, take one more step back. There's a new truck-based contract that's not so new anymore. Truck-based futures replaced the legacy contract. The old legacy contract was exclusively a Western SPF FOB Prince George. It was pretty much 100% SPF. COVID happened. It exposed a lot of flaws in all commodities, not just lumber, but lumber was the poster child of what could go wrong when you have extreme volatility. So long story short, the CFTC mandated to the CME, you either create a new contract or we eliminate the existing contract. So I know that there was some struggle with acceptance of the truck-based contract, but it was either no futures or truck. That was the alternative. And so the CME a year ago, starting August 8th of 2022, started and rolled out the truck-based contract. Some of the big differences with the truck-based contract is it's a quarter of the size. So 4 trucks equal that 110,000 board foot car. The other big difference is that it's delivered FOB to Chicago. So there's about a $108 adder. When you look at futures relative to the old legacy contract, you need to add $108 a thousand. And so then the other, I guess the third big thing is that it's no longer just a Western SPF contract. As long as it's got a number 2 stamp on it and it's not Southern yellow pine, you can deliver that wood into the new contract. So Eastern SPF, Western SPF, domestic Canadian fir, hem fir, those are all deliverable species now into the new contract. And, I know we all, the other thing I'll say is that we all get hung up on the delivery mechanism of futures. It's a deliverable contract. 97% of the people that will ever trade lumber futures will only use this as a financial stopgap in trading. They will never go through making or taking delivery. So the other 3% are going to use it as an EFP tool, an exchange for physical, where they would exchange their futures contract for physical cash. So less than 1%, 0.0001 would ever go through the CME delivery process.
Since the new contract, has anything gone through CME delivery process? Has any contracts? No.
No,
And
so
in a
far, no.
well-functioning contract, there should be zero. There is absolutely no reason why anybody ever makes or takes delivery through the CME mechanism.
So the last time we went through delivery was March of 2022, and ended up being a giant. It never should have gotten to that point. It went through that point. And the CME, at the end of the day, if it's a deliverable contract, you have to have the mechanisms in place to go through that delivery process. They have to think of every single angle possibly if this were to be delivered. But the reality is the only time somebody should ever go through the delivery process, whether you take delivery or make delivery, is if it's advantageous to you. Is there a freight advantage? Is there some kind of significant advantage? I'm not talking $2, $3 a thousand. I'm talking where it has to be so obvious that you would go through the delivery process. In doing this for a long, long time, pretty much since 2004 to 2007, there's no reason, no rationale to go through delivery. I can't look back at any of the deliveries I've done through the exchange and said, this was the greatest idea in the world. It usually ends up being, why do we do this?
I heard an interesting story when one person did it a couple years ago just because they were new in the wholesale industry and wanted to take delivery so they could open up an account with a mill, and it actually worked.
Yeah, no, and again, so you have to understand, not necessarily taking delivery. I won't name names, but 90% of the sell side of deliveries are two entities, Western SPF sawmills. And for a lot of people, think of wholesale brokerage, they don't get to see those lists on a daily basis because they won't be sold to. So this is your opportunity. If you want to deal with select mills, you can actually touch their wood mill direct. You actually get to look at their tallies and buy that wood direct. So from an EFP standpoint, which is an exchange for physical, 99.9% when we think of delivered is actually EFP'd, and that's off exchange. That's not through the CME. You can EFP any species, any item that you want. You can do southern yellow pine. We've done southern yellow pine EFPs. We've done Euro EFPs. We've done Hemfir, Doug fir, Eastern SPF. We've done Eastern Boston. We've done studs, MSR. You can EFP anything that you can creatively think of if both counterparties understand what they're doing and want to do it. Delivery, once you get through that delivery mechanism, then it's the contract specifications, what's written into the contract.
So, Greg, I think it's important to know for people listening here, one, it's good to learn about futures, even if you're not going to trade them currently, for a couple reasons. One, most negotiations that you do farther out than spot, that counterparty is looking at futures. So if you don't know what they're looking at, and Matt and I talked about this yesterday, and Greg, I really don't want a lot of people to learn about it sometimes, right? Yeah. From a selfish standpoint, right? But let's talk about where people get lost is when they try to make that segue from the futures market to the cash market. You were talking about EFPs. We've EFP'd Euro in the last few months, right?
Which is awesome.
We were the sellers, right? So I think there's a misnomer out there that people are like, well, only mills can sell or EFP. That's not true. Anybody can sell or EFP. Anybody can buy or EFP. So the question is, why aren't more mills doing it? And I had a good conversation with somebody at one of the events. They have to get their board of directors, all their management, everybody else on the trading floor, all in lockstep with agreeing on something. It's hard enough to get a few people to do it. And I think there's a a lot of people out there that don't want to say they don't know, they don't know. Have we worn that one out yet, Greg? The don't know, you don't know?
No, I don't think you ever. I don't think you ever wear that out. But I mean, I think that at its most basic, I've always been interested in the fact that the number of people that look at futures, which is a price determining mechanism, which is a risk management tool, and they use what it may or may not be doing on any given day as a decision point for a cash transaction today. I can't tell you how many times people go, "Oh, why were futures up $13 today?" And
I had that question today.
I have the exact same answer all the time. There were more buyers than
Yeah.
sellers today.
Yeah, no, and I will say, Greg, I think that's a great point, and that we did this when we spoke at the Montreal Wood Convention in the spring. We did this at the BCMC show last week in Indy. You've got a decent sized audience, and everybody's excited to hear you speak. And Alex will ask, how many people here look at futures on a daily or weekly basis? 90% of the room raises their hand. Okay, keep your hands up if you actually trade them. 90% of those numbers put their hands down. And the whole point is, you look at something, it has a psychological impact, whether it's up or down, whether you're going to buy or sell, how you're going to buy or sell that day. You're going to use it as a negotiation, or attempt to use it as a negotiation leverage tool, but you don't actually trade it, but it influences your decision making on a day-to-day, week-to-week basis. And at the end of the day, futures is not meant to replace what you do in the traditional cash market. It's an adjunct. It's a tool in the toolbox. It's meant to complement what you do day to day, week to week, month to month in physical cash. At the end of the day, futures should help grow your market share. And this is the critical part, without increasing your exposure. If it's increasing your exposure, you're not using it properly, or you're speculating. And there's nothing wrong with speculation, but it's critical. Am I using this as a risk management tool or a speculation tool? And I think a lot of people have a difficult time understanding one is in one silo, the other's in the other silo. Don't combine the
But
silos.
what if I want to be a hedgelator? What if I want to be a hedgelator?
And we could speculator. Yeah, that's what Alex Mead calls them.
But your point, Greg, is good. Everybody needs to decide, okay, am I speculating or am I managing risk? And if I'm speculating, recognize that, okay, this is something where I'm taking at-risk money and I'm making a decision. If you're risk managing, the first thing you have to do is, what risk are you managing? And you have to make that decision. Say, this is the risk that I'm managing, and then how you need to deal with the accounting side of it, whatever within your organization, so that it can be properly accounted for.
No, Greg, and let me say one thing, and that's you guys talked about people leaning out inventories, and there's a bevy of reasons. It's the wrong time of the year, the industry lows, seasonal lows are still ahead of us. There's actual cost of cash. Cash is no longer free, so the finance side of the equation is pulling their hair out. What do you mean you want to build inventory for spring when I can get risk-free 5% sitting in the bank? You're not doing that. Lean out the inventory until you see the business staring you in the face. Why are we going to build out inventory? Let the mills carry the risk. Why are we going to carry that risk? The difficulty is, you ask somebody, well, where's your risk? Well, the risk is if the market goes lower. Well, wait a minute. You don't own any physical cash, or you're at historical lows, 2-year lows, 1-year lows, 5-year lows on your inventory. So is your risk if the market goes lower, or is the risk if the market goes higher? And I think I say this all the time, our industry has a very poor habit of assuming somebody else's risk. They like to assume the industry's risk when it's not necessarily their own risk. Walk through your own yard, walk through your own operation, and then define where your risk is. And then, more importantly, okay, is it worth doing something about? And then do something about it.
Here's one of the interesting things when I look at the market today, 2G, is that we've gone from a place a week, 10 days ago, where futures was at $15 to $25 discount to the cash market, where today I could make the argument it's a 10 or 15. It makes $5 to print, but probably 10 or 15 to where you can actually get cash transactions done. So what are your thoughts about what's happened there?
I mean, I think that it's twofold. You had September futures go off the board. I think in the last 2 weeks, up until probably the middle of last week, you had new commodity fund type selling coming in. Rates continue to trend higher. Don't fight the funds. When the funds are going to operate, you saw November kind of wash out to the lows in that 478.50, 479 area. The second the fund stops selling, the industry scratches its head. Well, wait a second, Fraser's 406, prints up here. Why am I going to sell November at a perceived discount to where cash is? So the industry kind of calls out the BS. And if the industry is not going to follow suit with the funds, you get these voids back to the upside or back to the downside to reset the market. And as much as I don't believe necessarily in November at 498, if the answer is I'm going to buy a sawmill today at 398, or I'm going to buy November at 498, at least I have the liquidity in November if I'm wrong. If I don't necessarily want to put that wood on the ground, and I'd rather speculate until I get through October, because I think the seasonal lows are against me, but I want to own something, then that could be the case why November is getting these bids the last 3 days, more so than just the obvious. Maybe the funds are lightening up. The last in, first out crowd is lightening up on their shorts. From an industry standpoint, I want to do something. I don't want to buy cash. Maybe I'll buy 6-inch, but I don't like 4-inch. Then maybe I want to own something in futures and just take that risk off the table for the next month, the next 2 weeks to next month, before I have to step in and do something.
For those folks out there that are looking and saying, yeah, the cost of money is very high right now, and the cost of storage and decline in the value of product. I actually look at January as, wow, I can basically buy today's cash market for the first quarter of next year.
Yeah.
Wow.
No, and traditionally, and a great that's a great point. In that when we look at futures, you're in a cost of carry market. This is your traditional normal / bear market structure. There's no shortage of prompt wood. Okay, I can find what I need when I need it. So futures should carry a cost of carry. And when you look at the curve, when you look at cash to November 6 weeks out should carry some premium to cash. When you look at January relative to November, our rule of thumb is you add $20 1,000 to each contract month. So when you look at November versus January, that spread came in today to negative 1130. Yeah, January, I can pick up $10. I'd rather own as far out as I can at the cheapest possible number, especially for future Q1, Q2 type needs. You go out on the price curve of futures, and if I can buy Jan, March, and May, and I look at those cost to carry structures, and if I can build that into my equation and forward pricing jobs, that's where I own my wood. The other big bonus of futures relative to cash is that I'm only asked to put up 8 to 10% margining. I don't have 100% cash outlay to own this right now.
Matt and I were much happier last year at this time when we were getting $100 for $100 over the cash market or more for January. We want that back again. We want our MTV back.
Matt, we were talking about that
honestly,
yesterday.
I just go back about a month and maybe 5 weeks, and I was selling the contract at 560 and some change. So I look at it a little differently than you, Greg, and I look at it more from the hedging perspective.
2G or 3G?
Well, both you guys, because I've done all the same things that you and Ashley were talking about, where I made delivery and did the EFP as the seller. I've actually taken delivery of alternate products through the EFP process, like 2 before utility and dug for studs. I mean, I've done all kinds of weird things with futures over the years, but the difference between the way I think about futures and the way I think about cash is significant. The futures market is made up of people that are financially savvy, and they're looking at things like stochastics and RSI, and they're looking at interest rates and cost of money, and they may or may not even be in the lumber business. They're pretty sharp people, and so you're going to have a different conversation if I called up Greg Kuta and started asking him, hey, what's stochastics and RSI right now? He knows exactly what I'm talking about. I don't have to explain it to him. There's no guesswork here. We're all four of us understand what I just said, right? But you know what? I had to read some books and ask some questions 25 years ago to figure out what all this stuff meant. And so it's no different. Futures is no different than cash in that it's made up of people that understand the contract and they understand what the mechanism's used for. And that's totally different than me calling lumber retailers and distributors and offering them product from my sawmills or from my inventory, right? As a trader, or calling up all the mills that I've bought from for the last 30 years and trying to buy things that I want to buy, right? The cash market in some ways follows the futures market. Not always, but in general, I would say that the futures leads cash typically. If you're not a futures guy, but you are a heavy cash guy, you kind of owe it to your own career and professionalism to understand futures. So I would highly recommend that if you don't completely understand it, if you're one of those executives that Greg was talking about, that is like, oh, I'm not quite sure, I don't really know. Well, find out, learn, read a book, talk to some people with some expertise, because at the end of the day, futures really isn't that complicated. It really isn't. For me, it's a great tool as a hedger. But at the same time, if futures pricing makes a mistake, then I want to take advantage of that with the idea that I will take delivery of that, and turn that into some inventory, right? So it's no different than a sawmill as far as I'm concerned. If the mills want to price their
Matt,
lumber $50 higher than futures, then I want to take a look at futures, and then I'll just turn that into a cash transaction down the road.
Matt, that's spot on. Again, it's not meant to replace your traditional business. You just hit the nail on the head. If I'm a buyer, I'm going to buy from sawmill A, sawmill B, sawmill C. Okay, futures is sawmill D. Just look at it as the CME sawmill. If
Right.
I'm a seller and I can sell to customer A, customer B, customer C, futures is the retail, the distributor. It's the CME distribution. It's CME retail yard. And again, if I can't get what I want with my traditional customer base, A, B, and C, then maybe I'm going to look at futures. And if it offers me a better opportunity, whether I'm buying or selling, that's all we ask people to use it for from a risk management standpoint.
Greg, you take 10 CEOs from large, mid-sized, small lumber production companies across the world, let's say Canada, US, Europe, and you ask them 10 basic futures questions. How many of them would pass that quiz?
Probably 3 or 4.
So, Greg, you represent 2G. I know you represent some mill sellers. What's their appetite for locking in the first half of next year at today's futures prices?
Look, I think coming out of COVID, you have unrealistic expectations, and 2023 has been a humbling year for the average producer, and that what was is no longer what exists today. So at $1,000, nobody wants to hedge, because why would I lock in? Again, when you look at the price curve, you've got cash returns up here. You're being asked to sell futures $200, $300, $400 underneath those returns. Look, if the market falls back to those numbers, we'll still be profitable at $350 to $400 returns. Every dollar matters. So believe it or not, and a big part of this is Ashley referenced this, publicly traded companies. They needed a time frame to see how the new contract would develop and work. But part of that is no publicly traded company outside of BC and Alberta is going to do an EFP program or just a futures program and sit there in the spot month knowing they physically can't deliver the wood. So you cleared a big hurdle, especially on the eastern side with publicly traded companies. We can physically deliver into this contract. The board approves that, okay? But it's a slow moving ship to get that approval. But going back to what you were saying, Greg, at $350 to $400, you have engaged a significant amount, a whole new tranche of producers, because every dollar matters now. And when you're publicly, especially if you're publicly traded, you can't keep selling the same stuff when you have 2, 3, 4 consecutive losing quarters. Hey, guess what, shareholders? We lost the least amount of money, us versus our competition. You're still losing money. So again, at $350 to $400, you open a lot more eyes, and there are Eastern mills, Euro mills, there are other domestic U.S. domestic mills that have, and you've at least piqued the interest now because they're bleeding.
So one thing I would say, Matt had a great point here and about how he learned. And Greg, the first thing when I went to work with Greg years ago, he had me hand chart futures with a pencil.
That's awesome.
And Greg, I think I did it off, and I remember when we had to tape extra things on there because we had a little rally in lumber. But
yeah, it went over $250.
But there were some basic things. So whether you're a retail buyer in Texas or a truss manufacturer in Columbus, here's what I suggest. 1, to talk to Greg, 2 G's, Kuta.
They can talk to me too.
Start learning some stuff. Here's how you learn. Here's how I learned. First of all, know what that futures price means relative to you. What's your freight delivered on that contract? So you know when you're talking to somebody about spot market, what the futures price means. That's the biggest thing I saw people move their head around in the audience. They don't know how to make that move. So learn that. Look at the price every day on a chart. You can get them off of any free service on the internet, basically, if you want to look them up. I'm not going to recommend any specific ones. You can ask Greg about it. But also look at volume and open interest, which comes out the next day on the CME website, because there's a big difference if a price goes up high and the volume is high and the open interest goes down versus the open interest going up. It's a whole different reason. And then look at the commitment of traders report that shows, as Greg said, he was talking about funds, look at who's long and who's short. Those are just some simple things you can do to start learning about the market.
Greg has a great bedtime book reading for any of those people that really want to get under the hood. This is the kind of
you're gonna have to read it. You're gonna have to read it because it's reversed, Greg. It's option volatility and pricing strategies,
advanced
right?
Trading techniques for professionals. This is light reading. When you get into this,
I remember.
They'll spin your head.
I remember years ago, I read a book about futures, and it wasn't just about lumber futures. It was just written by a professor of economics who had written some 200-page book about futures. So that's where I kind of learned the terminology. And then after that, I opened an account, started trading futures on my own, made lots of mistakes along the way. Thankfully, none of them were like career ending. I have to say that I got a lot of advice and I learned a lot from other people. And that's true both in my cash trading and my futures trading. But I've aligned myself with some pretty sharp people over the last 20 plus years of futures trading. And so I credit them just as much as me for learning certain things about the market. I never really used to pay much attention to market makeup, that kind of stuff. I trade mostly as a hedger. So I basically am just looking at the price going, well, is that a good price for me to hedge? Does that make sense for me to, like, my inventory costs this and the board says I can sell it for that? Really, the math is no more difficult than that for me. My biggest problem is I have to stay disciplined. If I'm hedging, I'm not hedulating, Greg. I don't hedulate. I hedge when it makes sense, and then when I have achieved my goal, I get out. The biggest thing that I do is just stay disciplined, right? Stay in your lane, do what you're supposed to do. Don't change directions just on a whim because something changed. Just do your business and then use it, get out.
Need 3 things, Matt. You need a plan, you need patience, and you need discipline. Those 3 things, that's all you need. And you got them.
I think the one thing that people don't understand is sometimes how much patience you need to have. And I'll tell you an example of this. Back in 2011, I believe it was, I put on a trade where I bought a whole bunch. I bought like 75 cars of cash 2x4 and 2x6, and our average cost FOB mill was 122.
Got a hunch, buy a bunch.
That's what I bought. I bought all that, sprinkled it all over the country in different reloads, and then I sold the May contract and the July contract at an average of 182. So I had a $60 basis on. It took until May for that $60 to come in. Like, it literally, it was flat, 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 flat. And all of a sudden, boom, $60 shows up. It could take 6 months sometimes for a trade to come together. Sometimes we want it to
take a
happen in
year and
1
a half.
month, but it happens. Yeah, I mean, it's just the dangest thing sometimes where you scratch your head and you're like, how come this isn't going quicker? But
I
it
always
just
look at it,
isn't.
it's kind of two things, Matt. Is like a really, really great trade. You don't have time to get enough of it on before it starts to move in your favor. But the ones that you can really get a lot on, those are the ones you got to worry about.
Yeah, that's where that patience and discipline comes in,
when
right?
you can just keep
deep
putting it
pockets,
on,
yeah.
then you got to really worry.
I'll throw one more in here since we're having fun. It's the trades that I always thought were no brainers and put a bunch on and already counted my money were the ones I've literally paid the most tuition on.
Yeah.
It's the ones that my whatever was as big as a decimal point when I put them on and my eyes were watering and I would lay awake thinking about them, ended up sometimes being the best, right? And I don't know why.
And so one of the things that I always recommend to new traders and even existing traders, people that have been doing this, and I still do this, is I keep a little ledger. And when you initiate a trade, I'm not asking you to write a dissertation, but why did you put the trade on? It doesn't matter if it's speculation, doesn't matter if it's hedging, it doesn't matter if you're trading lumber, Bitcoin, crude oil, if you're trading equities. Why did I put this on? And go back and look at why you put this on. What were the expectations? What was the risk profile? What was the profit expectation on that trade? And it keeps you very well grounded as to why you did something. So you don't, good times, bad times, it helps you not question. It helps you stay the course and keep the discipline why you did something.
So real quick, I wanted to talk about one more thing here. So, well, a few things, and we'll jump in and we'll talk a few extra things. So, Greg, you always said people always do. You can always see people gravitate toward what they're compensated to do and away from what they're not compensated to do. So, Matt, Greg, Triple G, we're compensated on what we produce. If we lose money, we don't get paid. If we make money, we get paid. I probably wasn't fair to the production side of this. What my perception is sometimes why mills won't trade, they don't give the autonomy to one person at that mill to stand up and say, I'll be the person to do this. I'll be the person to take this risk. Give me the guardrails of what I can and can't do, and give me what my budget is, and I'm going to go out and hedge an EFP production for this mill on a regular basis when it makes sense over the next amount of years. And here's the volume I'll do. Here's what my expectations are. There's nobody at those mills that are paid most of them are paid a salary and not really
they're not incentivized to do it. Yeah.
They're not sent. If they make $5 million on the hedge,
they're not getting a big bonus.
It seems to me like, okay, but if you lose $5 million, they're like, why didn't you make it on both sides?
In my viewpoint always is, as if I'm hedging, I want to lose the most amount of money on the futures. Because whenever I hedge, I don't hedge 100%. I hedge a percentage. And I always want to lose on my futures account because that means I've done much better. If you're a mill, if you're a producer and you sell 1% of your production, the more you lose, the better.
Yeah, it's a good point. What do you say to the mills who say that with our amount of production, the futures contract isn't really meaningful for us to do anything?
Well, I think ask them if it's meaningful now when you have losses on a consecutive quarterly basis to your shareholders.
Great point.
Yeah, I mean, I think honestly, I don't think that the vast majority of the people that are producing the lumber really understand what the futures contract could do for them if they wanted to actually analyze it and trade it. There's a few left out there that are actively trading it, and they're using it as a way to open up new markets that they may or may not have access to. But mainly they're using it as a way to sell a premium in the board when it occurs, and then just use that as their partial order file for the expiring month, or doing expits with people that they've aligned themselves with, right? So the other thing about the new contract is it opens up the delivery process to Eastern sawmills. I remember years ago, back when Tembec was still around, I was in their headquarters in Timmins, Ontario, and they had a big futures board up on like a projector screen. It was like 8 feet by 5 feet. And I asked the guy, the executive, who was hosting us, I asked him, "Do you guys actually trade futures?" He's like, "Oh, not really." I'm like, well, then why do you care what futures is doing from a day-to-day, hour-to-hour, minute-to-minute basis? Well, we just pay attention to it. This goes along with what Greg said, where people stare at futures all day long, but they don't really know what it means, and then they use it to influence their buying and selling decisions without actually shipping the contract or selling the contract when it goes to a premium or buying the contract when it goes to a discount. And so it's like now that the Eastern mills can ship it, I think that's actually good for us as buyers. And especially if you were like a Chicago distributor or even a Michigan, just somebody in the Midwest, if you want to take delivery, you've now got that option to take some Resolute or some of the other Eastern mills that are out there these days, and they can ship it. They can ship it to you. So that's a good thing. I think hopefully that'll increase the liquidity in the contract.
We had a large buyer call us today, ask us if we could look at putting a program together, EFPing out of our own mill. This is creating on trucks and cars. This is creating some great opportunity everybody should look at. Real quick, what I wanted to talk about, let's jump into a few things that came out this week. New home sales. Greg, what are your thoughts on that?
Continues the string of like softening housing data. I mean, the housing data for the year has continued to be favorable and surprise people, but new home sales were down 8.7% from the prior month. They are still up 5.8 from a year ago, and they're up, year to date. New home sales are up 1.8. I guess the thing that I'm watching is the supplies up to 7.8 months. I mean, that had been hovering below 5 for the last 18 to 24 months, and over the last few months now, it's really moved up 7-8%. I mean, I'm going to eyeball that. If you all of a sudden see the supply of new homes for sale up at 10 plus months supply, that's going to impact production builders in the first half of next year and their ability to sustain the current build cycle. Now, we pointed this out in when we look at housing starts, we watch completions really carefully, running at a 1.4 million pace, which is on par with what starts are now. But the real number I look at is the just shy of 1.7 million houses that are under construction. So, you look at that pipeline, and we got to watch it, particularly with the backdrop of rising interest rates. I think Jamie Dimon just wanted to get a reaction yesterday when he said that people aren't prepared for 7% Fed funds rate.
Which is all it does is
Yeah.
I think all you're doing is just reaffirming what we've been talking about really for most of the year, where this market is just a production driven market. It's not a demand driven market. And we've been stuck in $100 to $150 range all year long. I expected slower business in the fourth quarter and the first quarter next year. And these statistics that we're talking about aren't really doing anything to change my mind. But, the real big question is, at what point do Western sawmills that are selling green Doug fir for mid 300s or Western BC, Alberta mills that are selling, 2x4 and 2x6 in the mid
Mills don't
300s,
shut
at
down
what point
because
do
of
they just
price,
cry
Matt.
uncle and say,
Mills
you know
shut down
what,
because they
we're
can't
going to
sell
just
the
take a
wood.
break? And I don't know. I mean, typically there's a lot of production this time of year. Yeah. Well, it's getting harder to sell the residuals too. So, it's a little messy right now in terms of like economy isn't very good. 2x6 number 3 is not something you can dump to China in large volumes anymore. That's stacking up at sawmills. The pulp and paper business isn't solving anybody's problems on chips. There's more moving pieces out there than you realize. And then if you want to go higher and put on a second shift, well, good luck. I mean, it's going to cost you a ton, and there's not that many people wanting to work in a sawmill. So, and then your log costs have gone up, and all kinds of stuff are sort of against these producers right now. So it's a different type
I was
of.
talking to our friend Greg Casey today, and Casey was telling me the pellet industry and the industrial industry. I don't sell too many of them. It's kind of hurting a little bit right now. So maybe we can see that low grade and that whole mill cutting profile is taking it a little bit harder than normal, because that low grade for a while, if I remember, wasn't a big discount to the tradition, just the number 2 market. But it sounds to me like the economy, the utilities, and all that are having a hard time catching a bid on anything right now. Are you hearing any of that, Matt?
Matt,
Greg?
what's the number 3 market in Texas now? Is that softened at all? I mean, it has been one of the stronger markets.
A little bit. It's not significantly lower. It's a little lower, but so is the 2x4 2 and better, 2x6 2 and better markers. So is the stud market. I mean, so is everything. But the value of 2x4 number 3 compared to a year ago is about 100 higher today than it was a year ago. And so, it's been pretty stable. Mills aren't trying to make more 2x4 number 3. That's not their option. The number 3 in economy and utility is a fall down product. So people got to remember that mills don't make that stuff because they want to. They make it because there's a defect in the log. The knot's too big, or there's too much wane, something like that. And then the other thing that's changed in Canada specifically is that we had a good 10 to 12 years where the pine beetle just devastated the log supply in BC and Alberta. And the percentage of low grade that used to come out of a dead log was like 25 to 30%. A lot of it was shake, a lot of it was split, but there was a massive volume of low grade coming out of that log. And now those logs are pretty much gone. And now you're back to historically that 8 to 10% of number 3 falling out of the log. So that means there's just not as much number 3 production as there used to be. And that probably won't change in my lifetime unless there's another pine beetle infestation that I'm not planning on. So the thing about economy, like right now, economy you can buy with a 1. Okay, it starts with a 1. And 2x6 number 3 you can buy starting with a 1. I bought some 2x6 number 3 below 200 recently. I'm not the only guy. I'm sure there's other people that could still do that today. So there's no easy answers for anything other than 2x4 number 3. Like seriously, that's the only low grade product that's still holding its value, and that's
point,
because
Matt.
they use this
One other thing I had on the whiteboard here I wanted to talk about. Keep hearing buyers now saying they're running their inventory down to lower levels, right? And historically, these big yards, this is the time of the year, and somebody explained this to me, where they're getting their inventory low for bonuses, whatever, right? But do you see, Matt, some of these big yards, especially the consolidated ones, running their inventory on a leaner level right now?
Some people are and some people are not. So I guess it just depends on the corporate board and the management teams. There's some companies that really have a strategy to carry low inventory going into the fourth quarter and starting out the first quarter. That's just worked for them. They like that strategy. They're not going to change that strategy. It works. And then there's other companies that stock lots of inventory and have millions and millions of dollars invested in inventory where they just don't really care. They just are looking at margin. Like, are we going to make a margin on this or not? And does the margin justify the expense? It's sort of mixed right now, Ash. I would say that my customers, for the most part, are a little more cautious about what they're buying just because of this time of year, and they're getting offered more lumber than they were a month and a half ago. But at the same time, I'm still doing a lot of business, and we're still, as a company, doing a lot of business. So it just tells me that there's relatively low inventories in the field, and the mills and distributors are supplying the lumber for the most part.
Greg let me know that I didn't make it his idea till somebody else brought it up a week later. We were talking $90 to $100 oil, and there's people out taking orders on forward pricing for the end of this year, and some in some first quarter. I think when do diesel prices start to slowly move up, and all of a sudden those $500 to $1,000 hauls are now $800 to $1,400 or more? Greg, Riley, you have pretty good insight on that one. What are you thinking on that? How are you positioning yourself?
The trucking rates will probably hang in okay for most of the fourth quarter, just because of the seasonally lower demand. I think if you're going to have a situation, the combination of winter, which slows down cycle time anyhow and availability, historically, starting February, March, you get an increase in truck rates anyhow. So it's definitely a first quarter. Right now, I mean, it's a challenging environment for the carriers because they're getting squeezed. Rates are low and costs are going up. So
I
Our situation out west is a little different, Ash, because we've got the Christmas tree season starts in the Northwest, and all of a sudden you got how many 40 million people in California that want a Christmas tree? Most of those Christmas trees are coming from Oregon or Washington, and so there's in about 3 weeks'
I like a
time
good Fraser
there's going to
fir.
be just a giant sucking sound. Yeah, we don't make Frasers out here. We're like noble fir, Douglas fir. You can get some hemlock, little silver
I like a
fir.
balsam fir. Has a really nice smell. You know, right? I like the
Yeah, it
balsam
smells like
fir.
orange, like citrus.
That's
Yeah,
smell of
yeah,
Christmas. There you go.
yep,
All right, let's wrap it, Ash.
exactly.
Well, listen, Greg Kuta, how do people get a hold of you, and what's the best way for them to get a hold of you so they can first get educated a little bit more and then start to set up and move forward a little bit?
How do you get a hold of me? You can go to my website, westlinecapital.com. You can contact Ashley. I'm out there. I'm not hard to find. So if people have any specific questions, and again, whether it's me, I'm not gonna shamelessly plug my competition, but competition is good. I will say, just like you have your cash relationships, how you mesh with people is probably just as important as always buying low or selling high. So I think first and foremost, you need to have that personality. You have to have that relationship mesh, but above and beyond that, education wins. You run a business, at least educate this. There are certain days where this drives your underlying business. So at the very least, educate yourself as to why something can influence your bottom line day to day or week to week or month to month.
Great. Well, we appreciate you being on today, Greg, and
thank
talking
you for
lumber
having
futures.
me. I appreciate it.
You bet, and appreciate the audience. And I want you to all remember to stick around or to tune in next week. We're going to have a economist on that specializes in the housing industry. Has over 70,000 Twitter, now X followers, and has a pretty good following on LinkedIn and all the other social media. So I'll announce him a little bit later in next week, but you'll definitely want to be on to ask to listen to some of the insights that he has and some of the very cool charts that he comes up with that really have a lot of data in them. So Matt Beamer from Hampton Lumber Sales, Triple G, thank you. Greg Kuta, thanks for this.
Thank you, guys.
It's been a great show, and we'll look forward to doing this again next week.
Nice to be on. Thank you.
Guys.